Thank you, everyone, for coming here. So, just for a quick intro about myself. I joined Chainlink around 3 years ago now, and I've been working on integration since I got there, right? So, I had the chance to work with pioneering projects in DeFi, Aave, Synthetics, and many others. And for this talk today, I wanted to focus really on DeFi. Chainlink and DeFi, what are we doing there? How are we helping this ecosystem? But also, why is DeFi so key for our societies and helping shape the future of tomorrow, right? Hopefully a better future. So, I think I might have a small issue with remote. Oh, perfect. Okay. Yes, so today I would like to talk first about what we have in our current societies, right? The way people work is they get into agreements with each other, with companies, with governments, for anything they do. When you go into a bank, you deposit your money there, you get into an agreement with the bank. When you settle into a country and you start paying your taxes there, you get into an agreement with the government, right? Now, the way these agreements work, they're based on trust, right? They're based on trust where you assume that the other party is not going to break the agreement he has with you. It's basically counterparty risk. Now, the way you judge this risk in today's society is really based on brands, right? So when I start using a bank, this bank is famous. It has a logo I know of. It has a reputation. It has a history. This is a brand-based guarantee. It's the same when I use Apple, when I use Facebook. I use a brand here. I trust a brand, a logo. Now, the issue with this paradigm, it's been useful historically, right? It's worked. It's also extremely opaque, meaning you don't really have any guarantees that the party you're entering the agreement with is not going to break it. You don't have any way of knowing that he's not going to press the red button and just, I don't know, freeze your funds in the bank, or delete your Facebook account, or any other things that could basically harm the agreement you entered into, right? Now, next to this, we have what we've been working on for the last few years, for the last decades, which is cryptographic-based guarantees. Now, these guarantees are much, much stronger. They cannot be cheated. Code is law, and cryptography is the thing that enforces this law, okay? When you start using Bitcoin, when you get into the BTC network, you know the inflation rate, you know how new Bitcoins are being mined, you know everything about it. You enter this game knowing every condition out there, and knowing that these conditions cannot be changed by any single party. This is very key. It's the same for a smart contract, for DeFi. When you start using DeFi, when you start depositing your money on Aave, on Compound, you know the rules. You know what you're getting into. You have full transparency over the smart contracts, and you have a full guarantee that you cannot be cheated out of your agreement. This is a high transparency word we're aiming to bring with DeFi. This is, I start using a protocol, I start putting my money into it, and I can trust this protocol. And I can trust that I won't be cheated out of the agreement I entered. Now, this is really cool, right? Like what you're discussing. Now, why doesn't everything run on a blockchain already if it's that great? The main reason is you have two trade-offs. You have the trustless trade-off where you want a system where you have as high transparency as you can and as strong guarantees as you can get, which is what blockchain offers. But you also want something feature-rich, right? You want something where you can build stuff on top. For instance, in Web 2, you can build anything with APIs. You can build, Uber uses Google Maps. It uses banking APIs, all of this stuff, right? Composability here is very key. Now, the issue with blockchain is that they're siloed. A blockchain doesn't know the price of gold. It doesn't know the price of silver. It doesn't know the weather in the US today. It doesn't know any of these variables, right? Now, without these variables, you can't build many things on top of a blockchain, per se. That's why oracles exist, and that's why Chainlink is working on oracles. We want to make the blockchain world feature-rich. We want to bring all of this data, we want to bring all of this computation to allow the builders of tomorrow to rebuild the new world, which we have currently in Web 2. We want to build it in Web 3. And we want to bring all of these great guarantees I just discussed to Web 3, and to hopefully the future of finance, the future of insurance, the future of global trade, and anything we create going forward. So I'll just go over a small example on why this is so key. I'm sure you remember the Robinhood incident. People used this platform. It was a brokerage firm, right? So they bought some stocks and they were having fun trading. And all of a sudden, because there was some pressure being applied on the centralized party, these people were cheated out of being able to trade on the market that they were offered, right? Suddenly, they were stuck in a trade, they couldn't go out, and this is really what can happen when you start trusting brand-based guarantees instead of the cryptographic ones. If there is a red button out there that can be pressed to basically shut down something or to freeze some accounts, it's going to get pressed at some point, granted if the right pressure is being applied by the right people. So that's why DeFi is so key. DeFi, you enter into an agreement with a platform, with a protocol, you start using it, you know the rules, you can't be cheated out. And that's what we want to build. Now, DeFi runs on many different autonomous services. It runs on blockchain, obviously, but it also runs on many services that Chainlink has been providing throughout the years. It's grown from being a few million. I remember giving a talk about DeFi 2 years ago, and it was probably 10 million, right? And we were discussing, oh, great, 10 million, that's awesome. Now it's 200 billion, right? And it keeps growing. It's exponential. So DeFi is not going away. It's still a very small part of the global value around the world. It's still a very small part of cryptocurrency value, even more so for the real world, where you have derivatives, real estate, stock markets, which are much, much higher than anything that DeFi can be, right now. It's just a blip on the map at this moment. But given everything we discussed, and given the potential that DeFi has, we believe it will grow exponentially. And we believe this blip will become a huge, huge square on this diagram I'm showing you here. Now, let's talk a bit more about how DeFi applications work. You have an on-chain part, you have an off-chain part. The on-chain part is a smart contract enforcing the business logic, right? So liquidations, borrowing, in the case of money markets, in the case of synthetic assets, it's basically I mint an asset. That's all happening on-chain, right? Now, the off-chain part is a very key part, which is going to provide all the data inputs to allow the business logic to work correctly. Let's give an example. Let's say a user deposits some funds on Aave, some ETH, and he wants to borrow some USD. This trade right here couldn't work if the Aave protocol didn't know the price of ETH and didn't know its value compared to USD, right? So how much do I know, like how can I value the collateral if I don't know this price? Well, I can't. That's why prices and price feeds are so key. So I'm going to go over quickly on the different services we've been providing to DeFi in the last few years and what we've built for this ecosystem. The main one is price feeds. Price feeds are basically a way to get data from the real world to the blockchain, okay? Assets as like Ethereum, like Bitcoin, like gold, like silver are 95% of them traded on off-chain markets, exchanges, OTC, all of this stuff, right? So you need to be able to get this data onto the blockchain. And that's what price feeds do. Price feeds are smart contracts deployed on Ethereum, on Avalanche, on many different blockchains. And this contract gets fed info from what we call Chainlink nodes. Now, some of the node operators are people like Swisscom, Dutch Telecom, so big telecommunication companies. Others are just node operators who've been staking and validating on proof-of-stake networks like Stakepool and many others. These Chainlink nodes get data from data providers. You probably know a lot of them, CoinMarketCap, CoinGecko. They are the guys who aggregate all of the data from decentralized exchanges and centralized exchanges to offer a full market coverage on any asset. Example, if you want the price of Bitcoin, you don't want to get the price of Bitcoin only from Binance, because Binance could go down or Binance could have some kind of crazy week. You want to get a full market coverage across every platform. That's what we get with price feeds. Very high reliability, full market coverage, and that's what currently powers DeFi. We have around 700 price feeds deployed, around 9 blockchains, and they're currently securing over $50 billion in value across 300 users as of today. Now, price feeds are very key. And the magnific, like the thing I love about price feeds, right, is they scale. With the more users you get more fees, right? So every user is paying a small fee to the network. And these fees get aggregated across every user to pay for more security, to pay for more node operators, to pay for more data providers, better data providers. So as we grow the number of users using price feeds, you start growing the security also, and you start making these feeds a fully independent and autonomous system which can expand and improve as the user fees get aggregated between them. So, yeah, price feeds are great. They scale with economies of scale. And in my view, they're really one of the huge pillars in DeFi. They are as key as a blockchain on which everything gets executed. Because if you have the wrong inputs in your DeFi application, you will get the wrong outputs, and people will either get liquidated or they will lose a lot of money. Yes, so we need price feeds. Now, next one is proof of reserve. Proof of reserve is a very interesting product we've been rolling out, and the main problem we were trying to solve is how can we get more assets from the off-chain world to the DeFi ecosystem in a trustless way. I'm sure you've all heard of WBTC and of all the stable coins we have around, like PAX and TUSD, all of these stable coins. Now, the way these stablecoins and these assets work is they have some backing, which is generally either on another chain. In the case of WBTC, it's on Bitcoin, or in bank accounts, in the case of stablecoins. Now, what we want to do is bring the proof of reserves that these assets are fully backed, fully collateralized, directly on-chain. We want DeFi smart contracts to be able to query the collateralization of each asset and assess. OK, I'm going to use, let's say, PAX. Is this asset properly collateralized? And the way it works right now is Chainlink nodes are able to get data directly from an auditor into the chain to say, OK, this is how much PAX has in reserves, and they're properly backed. Or if a stablecoin wasn't properly backed, then a DeFi app could know directly and have some kind of circuit breaker to make sure this asset is not used in its application anymore. You see? So that's what we're trying to bring here. We're trying to bring more trustlessness around custodial assets, off-chain assets, and this way bring more of them into the DeFi ecosystem in a more secure, more trustless way. So, and obviously you have a good example of why this can be so key. We always need to have audits and we need transparency around it. Otherwise, you can find some incredible loophole in the systems we use in our everyday lives. I'll go over quickly also another use case which is very dear to us. It's insurance. A lot of people today don't really have insurance around the globe, right? So for instance, we've worked in Kenya with EtherRisk to provide insurance for weather data where farmers are able to get insurance on their crops based on the weather in Kenya at any point in time. Insurance is very key. And Chainlink today is able to get this data from multiple data sources to say, OK, this is the weather in a certain place. This is how much rain is going to pour. And this can be very key to tomorrow have some insurance systems fully built on blockchains and able to independently have payouts based on the inputs that Chainlink provides. There are so many use cases, I wouldn't be able to cover even half of them in the time we have. We have an on-chain marketplace, which is giving data for any custom data points people want, going from prediction data on presidential election to sports data to esports to anything. So yes, we have this marketplace, it's been deployed, and people use it today in production for prediction markets like Augur and other things like this. Another thing which is very important is trust minimized computation, right? So we had a talk about NFTs just now. NFTs rely very heavily on randomness. There is no good way today, natively on blockchain, to generate randomness. That's why Chainlink launched its VRF product. What VRF does, it provides a cryptographic proof that the random number we generated, the Chainlink node generated, has been generated in an honest manner. And then these random numbers can be used to create some NFTs, right? So Avegochi, for instance, has been using VRF, has made a few tens of thousands transactions on VRF to get new NFTs minted on their platform, right? So you basically ensure that every asset that gets minted is minted in an honest way thanks to VRF. The randomness cannot be cheated here. And this is very key in the VRF ecosystem we have today. I'm sure you've all heard of Bored Ape Mutant, which also happened recently. They used VRF to generate the mutants they had. So, yeah, those slides just go over what I just said. Now, another trust-minimized computation we've been providing to the ecosystem is called Keepers. Keepers is a way to automate smart contract execution with what we could call bots. I guess we call them Keepers, which are basically able to distribute rewards automatically, to do liquidations, to do anything that requires a bot to trigger a transaction on-chain. Right? So smart contracts cannot trigger transactions by themselves. You need a trigger that pulls it, and that's what Keepers do. It's basically smart contract maintenance, and it's used by more than 50 users today on mainnet, and many more incoming. And yeah, obviously expanded computation is another huge use case, providing index data to DeFi. So let's say DeFi Pulse Index or SDeFi, which we've been providing for synthetics for years at this point. And that can be done with Chainlink node and is being done today in production. So yeah, look, I went over all the use cases. I went over everything we're trying to do for this ecosystem. In the end, we believe DeFi is the future. DeFi is going to change the world. We want to support it, and we're extremely excited about it. This photo is a bit old. Now Chainlink is a lot more people. But if you want to join us, please let me know. I'm available at this conference. And yeah, we'd love to have a talk. Thank you very much for hearing me out.
Thank you, Johann. So sorry about the noise pollution.
That's all good. I'm used to it.
That's all right. You work in crypto, so you can roll with it. Anybody have one or two questions for Chainlink? An absolutely awesome protocol, doing amazing work. If you have a question to Johann or the space in general, raise your hand. This is your time. Now is the time to happen. Johann, thanks very much. Really appreciate all the work. But hold on, let me get this. Let me get this young gentleman here.
I was just going to ask, when can we sort of expect more decentralization around your staking mechanisms?
Yeah, so staking is still in the research phase, and obviously we're working very hard on it, right? There are many different components to take into account with staking, with oracles. Oracles are not, it's not like validators, right, where all the data is on-chain, and so you have some very defined conditions to slash someone who's acting in a malicious way. With oracles, you need to define the source of truth to be able to slash an oracle or a bad participant, right? And this is something we're researching very heavily, and we're progressing quickly. But yeah, it's not as straightforward as most blockchains where the source of truth is directly the chain, and you can just look it up to slash someone, basically.
Awesome. A big round of applause for Johann.
Perfect.
Thank you so much,
everyone.
guys from Chainlink.
Thank you.